If we can surpass and get through that mental barrier, then, look what happened after that. So at the period that it was ending the stagnation days, it made an extra 400%. Hello everyone and welcome back to Statira Trading. This is going to be the last episode of the mini-series and probably the most important one, short-term versus long-term. Now this is seriously important when we are using trading, and it can be used in any aspect of life. It's going to be a great episode. We're going to jump into Quant Analyzer, where we can analyze the short-term versus the long-term of our own algorithm, Sequenti. Okay, so I've went on to the software Quant Analyzer 4, which we use when putting a portfolio together to analyze all the statistics. So let's dive into the Sequenti portfolio from 2015 to 2022. We can see that long term, this is a really, really good algorithmic system. We can see that the average year-to-year returns is 82.62% compounded, which is seriously good. But let's not deviate from long-term versus short-term thinking. We can see stagnation days, 77 days. That means it took 77 days from one of our highest peaks in terms of equity graph and took 77 days to exceed that. Now that's just about 2.5 months, which sounds like a long time, but when we look at this graph, do we care about what happened for 2.5 months? No, because we look at the year-to-date results at the end of the year and we think, yeah, this is really good. So thinking from the long-term mindset, we don't really care about short-term periods where it's in stagnation or it's not making profits. So yeah, that's exactly why we think from a long-term basis. But let's what if we took from, say, the start of August to the end of September, which these will happen when we're trading. That is the thing. We will get stagnation days. It could be longer than 77 days. We don't know. We just know that from 2015 to current date, that's what the stagnation period was. So let's do from the 1st of August to the 1st of November. Let's create that what if scenario. We can see that. Let's get the equity chart in. Okay. Yeah, so we can see from the start of August, right, the graph is constantly in a zigzag direction to the downside. Now, my question to you is, if you were manually trading and that kept happening, would you continue to trade? Now, I know most people will say no, because going through constant losses for 2 to 3 months is definitely tough in the mindset, which is, again, like I've explained in previous videos, exactly why you use algorithmic systems. But this whole period here, right? Looking at it in the short term, like when you're going through 2 months, it will seem like a long time, but it's not really a long time if we've got that long-term perspective, thinking, okay, what's it going to be at the end of the year? Even a year is short term, but let's think, what could that graph look like in 3 years' time, 5 years' time, 10 years' time? So yeah, this is exactly why we look at things as Statira trading from a long-term perspective, because this period here is just noise in the grand scheme of things. So let me go back onto the portfolio and show you exactly this period on the equity graph and see. Okay, so let's go to the stagnation period. And you can see that period is really here. Now, does that look like a big problem here in the grand scheme of things? No, it doesn't actually. It looks healthy to me, because you're going to have times where you can't constantly just keep going up and up and up and winning. You're going to have pullback periods. And for me, when we look at the whole grand scheme of this equity chart, you wouldn't even notice this over a 5-year period. So like if you didn't look at this every month, you wouldn't notice this period. You only notice these periods if you look at the charts day on day, week on week, or sometimes even month on month. If you want, people try and make money every single month with trading. Now, I'm not saying that it's not possible, but I think it's not realistic because market conditions change, and depending on what strategy you run, they might not work in those conditions. So that's why we look at things at minimum quarter on quarter. So every quarter I try and make percentage. That's one of my main goals. And I know it's not possible all the time, but that's the short time frame that I look at, quarter on quarter. So yeah, if you are trading an algorithmic strategy, or you lease hours when it's released at the end of February, please approach this with a long-term perspective, because we can see that, if we zoom out, which is what this graph shows, from the start of April 2015 to the end of last year, it's made over 400% gain. Well, it's actually made 660.93%. So that little stagnation period, if you stop trading here, you'd have missed out on some serious gains afterwards. This is exactly why we only think in long-term perspective. Don't get me wrong, we do look at the short term in terms of each pair that we trade in our portfolios drawdown, but that's nothing to do with the overall portfolio. We always look from a long-term perspective because there's so much benefits that it brings you. 1, allows you to be more focused on your goals. What I mean by this is, rather than thinking on a month-on-month target, we think on yearly target. So let's give you an example. Say you want to become a profitable trader. Well, that's not going to happen overnight. So let's say we give ourselves a year to become a profitable trader. That at least gives us a whole big time where we can go through lots of ups and downs and trying to achieve that goal. Obviously, we'll put small goals in between that, but thinking long term and thinking in that mindset will definitely benefit you. 2, it allows you to come over small obstacles, as it's part of the journey to success in really anything. So relating this back to our algorithm, we can see here that we have a drawdown of 77 days, like I explained earlier. Looking at this in the short term, you could get caught up in changing strategies, stop trading. If you keep thinking short term, you're gonna hold yourself back from look at the overall gain after this that we explained earlier. So yeah, we start seeing these small term obstacles as part of the bigger journey. And number 3, because we think long term, we're less stressed, because if we keep focusing on monthly targets, month and month and month, you could say you could set it as, I want to make 5% a month. Well, you're going to be seriously stressed if you're trying to make that every month. So rather than 5% for the month, what we try and do is, let's try in for 5% for the quarter. It might not be doable, but if you take that step back and look at it in a bigger time horizon, you're a lot more likely to achieve this. Obviously, with this stagnation day of 77 days, I think we would have struggled to make 5% even in a quarter. So yeah, just taking that step back, having more realistic goals and not trying to force it in such a short period. So yeah, if you think long term, you'll definitely be less stressed. And because number 4, because we think long term, over time, especially with trading, it will give us time back. Especially with algorithmic trading, because we step back, let the algorithm do what it does, and we have a long-term mindset, we kind of just let it do what it's meant to do, because we know that what happens between now and next month doesn't really do the system justice to, let's see what it does in a year's time, and then we can have a review of how the system's doing. Is it performing in line with what we've tested and our results are? Is it still within our drawdown parameters? So just taking that step back, thinking long term seriously helps with that sort of thing as well. So definitely will give your time back long term. And this goes hand in hand. Number 5, not being a slave to what you're doing. So if you keep thinking short term, you might jump from one strategy to the next, to the next, to the next, and you're just going to keep being a slave to learning a new strategy, or as most traders are, they're a slave to the chart that they'll spend hours upon the chart. So if we think long term, rather than trying to make the most percentage in spending the most amount of hours, let's take a step back. Let's let the algorithm do what it needs to do and think long term. Because again, if we program these systems, we don't need to be at the charts. The algorithm will do what it needs to do. We just need to act as a maintenance man. So just to recap what we've went over there on Quant Analyzer, you can see what the benefit brings when we look at things in a long-term mindset. Yes, on the short term, sometimes things can be tough. You can be in drawdown, you can be in zigzags, or like with the example, our algorithm Sequenti, you could be 77 days before your profit peak takes to surpass it. Now, yeah, that can be tough looking at it from a short time frame, from month to month. But if you know the edge, if you know the probabilities, and you know that over a multiple number of trades, the outcome is positive. So we zoom out. Now, this is exactly why we wanted to show you this episode, because we do have our own algorithm ready for launch at the end of February on the 28th. Now, this will be available to lease to anyone, but there will be a cap to it because we don't want to go public and let everybody use it. So there will be limited spots. So please, if you're interested in this, visit our website, www.statiraTrading.com, and sign up for the beta launch. Now, if you've liked this video, please give it a like and subscribe to the channel if you want more. Thank you very much for if you've listened into the whole of this mini-series. It's just to give you a small understanding of the basics and what we do. Thanks very much for watching.